Let's bring in Mark Hamrick, Washington Bureau Chief and Senior Economic Analyst for Bankrate.com. Mark, it's always great to have you.
Good to see you, John and Jenna. Thank you.
Good to see you, Mark. So the stock market loved the moderate inflation report. What was your take on it, Mark? And should we be concerned about core inflation ticking up?
I wouldn't attach too much importance regarding the performance of the stock market relative to inflation data. The stock market's been on a tear for some time, and that affects a relatively small number of individuals and even our viewers. Of course, everybody who has some exposure to the stock market, including those saving for their retirements via 401k, is glad to see that. We don't want to be dismissive of it either. Broadly, I think you broke it down well. There was some better than expected news here, or as expected news, and then some that wasn't as good as expected. And the reality, John and Jenna, is that price levels continue to go up. The consumer price index that you just referenced is up 24% since January of 2020. And within these categories, there were some signs that tariffs are beginning to have an impact. We see food away from home, in other words, restaurants and the like, continuing to rise more. That's a function of all the things that cause prices to go up in restaurants, like labor, the cost of real estate, that is something to watch. Elsewhere, we see services prices rising if you exclude things like shelter and utilities, and there are pockets of utilities that are going up. So while the stock market may be finding reasons to rally, I don't see Americans quite ready to dance in the streets about the level of prices that they're seeing out there.
With the core inflation rising, Mark, do you think the Fed is still on track to cut rates next month, or does this make that decision a bit harder?
I would say it's a strong possibility. We still have about another month's worth of data to go, and that includes job market data, a couple of weeks from now, and then the same inflation round a month from now. And so with respect to the futures market, it is fully pricing in either a 0.25% rate cut or 0.5% at the mid-September meeting. And many are thinking that we could get another rate cut after that by the end of the year. The other part is that, as we've discussed earlier, the job market has been slowing. And so, talking about the stock market finding reasons to rally, it's not something to be celebratory if we're seeing essentially hiring grind to a halt. So obviously a complicated situation, a lot to monitor here.
Complicated indeed, but maybe if we can uncomplicate, you had just talked about the potential of maybe 2 interest rate cuts before the end of the year. If the Fed does cut rates next month, how soon could everyday Americans feel that in their loans and credit card payments and mortgage payments?
Well, it's funny. I've been talking to my colleagues about this, and I've been saying, the things that are concerns about the economy right now, I don't think are really truly addressed significantly by even a couple of rate cuts at the hands of the Federal Reserve. So, would it really cause a great change in the quality of everybody's life who's watching right now? I would say not so much. But in the sense of, let's break it down, the Fed controls short-term interest rates, and that does have an impact on things like credit card rates and savings. And so I would say it will be a rather slow process, because we're still talking about a slow process in cutting rates. So we're going to see slightly lower credit card interest rates, but also less return on savings, and eventually we'd see it filter into things like auto loans as well. But we're still in a high price environment as well, so we have to think about the cost of financing and then the prices of the things that we want to buy.
Okay, Mark Hamrick with Bankrate.com. Always good to see you. Thank you, Mark.